All right, hello everyone. Just a disclaimer, verbally or audibly, in case anyone's not watching YouTube Live and listening on Twitter Spaces. This is not investment advice. This is all just our own thoughts on things. Macro markets, Tesla, Roblox, everything like that. Um, a lot of interesting things to talk about this week with all of those things. But first, Matt, you put out kind of a Twitter thread, kind of a Debbie Downer Twitter thread to the 10.5 full. I was just reading it this morning, and I didn't get a chance to talk to you much about it yet, and figured we just open source our discussion about it here. And you seem like you were not so impressed with the full self-driving 10.5. Just to temper expectations. I mean, it's beta, but you're not. The impressions most of us are getting that don't have the beta is that like, oh wow, this is like amazing from the other videos, but you had a different experience. Tell us a
Yeah.
little bit.
Well, yeah, like maybe just to back up a little bit. I mean, that was kind of my experience, or I guess my expectation before I actually got the software. I was watching a lot of the videos. We had Chuck Cook on here, who was very, I think, reasonable with what's great about the software and what doesn't work so well. And I've watched a lot of the Omar's videos and a lot of the Dirty Tesla videos, a lot of the other beta testers as well. And so my general consensus after kind of watching all those was that it's not perfect, but it's generally pretty good. And so once I finally got the software, it was just doing all sorts of very strange things. So the biggest one, like, it seemed to be within my own kind of residential neighborhood where roads aren't marked. It just drives really, really poorly. It constantly crosses over the center line, so it'll like get into oncoming traffic on a pretty regular basis. At four-way stop signs, it like creeps very, very slowly, and then will kind of like progress a little bit, and it's basically halfway into the intersection before it will kind of finally commit to going forward. And then just also like a kind of a host of other issues. And the overall experience was, really just that it's, more stressful to have it on than not, which is kind of what the CNN reporter had just said recently, where everyone was kind of piling on. It's like, oh, he's such a, deceptive reporter. But, as I read through his article, it was pretty similar to my own experience. So, on Twitter, I'd seen a lot of, only positive stuff on beta. And so I just wanted to share my own experiences, not trying to kind of invalidate that other people are having, very good experiences, but at least where I am and with the, about a month's worth of driving so far, it has not been very good. And kind of the updates, I think I've had 2 updates since I first got full self-driving beta. And those haven't really seemed to move the needle too much either. So
Do you think that, I mean, you're in Detroit suburbs and such. Do you think that a lot of this could just be the fact that maybe a lot of the neural networks and the driving capabilities are kind of overfitted? I know we've heard that term before from Elon, that it's sort of overfitted for California, especially, San Francisco Bay Area, for example, that like it works very well in certain areas, whether it's Austin, Texas, and San Francisco Bay Area, and certain flat, straight Florida roads or whatever, that it works best for certain areas that it's been trained on the most, and maybe the road conditions in Detroit, suburbia is very different in certain way characteristics that it's just not prepared for. Or what do you think, Matt, about
yeah,
that?
so I do think that's certainly part of the case. I mean, one of the biggest headaches that I have is a lot of the kind of turns out of like a residential neighborhood into a busy road. There'll be like a stop sign, and then maybe 2 or 3 feet in front of that, there'll be like a wall that's kind of like blocking, views out onto the main road. And then, it might be another 5 or 10 feet past that, maybe not 10 feet, but another 5+ feet, before you actually get to the road. So I've noticed, when I've kind of seen this, perpetual bad behavior on these sorts of things, I've realized that when I'm driving, I kind of just blow right past the stop sign and, get up to where the residential neighborhood kind of meets the actual road that I'm trying to turn onto. But full self-driving doesn't do that. It basically stops at the stop sign and thinks it needs to start turning there. So it turns the wheel, and then by the time it's pulled forward to where the road is, it's at this like crazy 45-degree angle blocking because it thinks it needs to turn too early. So like that's an easy fix in my mind. but they haven't fixed it yet. And so I think there does need to be a little bit more fitting for, like situations like that where the stop sign is drastically different, or is not the starting point for a turn. But I've had similar other issues as well. I mean, one of the things that happened this morning that I didn't talk about was there was just like a normal kind of merge, or I needed to change lanes to make a right turn that was coming up, and it had like a half-mile space where it was like perfectly great to do so, and it ended up doing it like kind of jerky, right in front of a traffic that was stopped at like a red light. So it like cut off this guy who was already braking kind of aggressively. So it just kind of like made a pretty dangerous decision at the last minute when there were plenty of opportunities to do so beforehand. So
sounds like you're still in like 10.1 instead of 10.5 or something.
Well, that's what, like, and people have said like maybe you need to calibrate your cameras, and that's possible. I was actually trying to recalibrate them today. It didn't quite finish that process. So I'll report back if that made any improvements. But it just, I do think it's kind of important that we kind of give honest, feedback about whatever's happening, and not just say like, oh, it's amazing, and robo taxis will be here in 2 months, and Elon's a genius. Like,
but it is hard to say. I mean, your experience is so different from like Holmars and some other people who are posting like raw footage of a complete drive with like zero interventions. Even Elon said he's driven a few times last night when Austin was zero interventions. So, I mean, I feel like their experiences are just so different than yours. There's something there. I don't think it's them I don't think it's them like, trying to wash their experience to be oh, this is amazing, even though they have hesitation, they have problems themselves. There's something there. Maybe it's the calibration, or Detroit suburbia is different or something.
There, I did get quite a few comments, and if anyone's curious, you read through the comments on the thread that I posted. There's a good number of them. I don't know. I probably had 10 or 12 people say something to the effect of, this is very similar to the experience that I've been having. And I think most of the people who made those comments were kind of like in suburbia, or otherwise like the middle of the country, not in the coasts. So maybe it's just there's a difference in driving there. But it also seems kind of strange to me, because like the stuff that Holmars posts, in San Francisco, that looks like way more complicated than like or the stuff that my car is struggling with.
Even if you watch Hyperchain Galley and his drives in Seattle, that looks pretty complicated, some of those drives too. Like
this should be relatively easier. And so I'm not like pessimistic on Tesla being able to solve this, but it's clearly not really good. My wife, it's gotten to the point where my wife's like, is just like, please don't turn it on while I'm in the car. It's just like driving like this and jerking all around. And so, I still like it, because I like seeing like the technology and like how it improves. And I kind of feels like we're watching history, like, how bad it is. Like, 10, 15 years from now, I'll be able to tell my kids, like did all these crazy things. Like my car tried to drive into a gravel pile and like tried to ram into a parked car. Like they're like, no, it wouldn't do that. It's like, back in the early days of autonomy, that's what it did. So
they probably think it's impossible. Yeah, it's funny.
Like I'm not trying to like dump a bunch of cold water on it or anything, but I was just not hearing that voice out there of people saying, actually my experience is bad. And once I posted that, I think a lot of people said, you know what, that's pretty similar to my experience as well.
And there's also the I think the talk of like needing another hardware stack, or cameras, different camera placement or something. And it's possible, but I think Elon, a month or a few weeks back when this was, being talked about a lot, he referenced something in a tweet, or liked to tweet about showing how easy it is to pop off the pillar, like glass out exterior, just pop it off, and then you can take the camera out and replace it with like a wider fisheye lens camera or something like that. It seemed like he implied that maybe that's the solution, from just liking or tweeting, responding to that tweet or something, instead of having a whole new like car design. You can't just like retrofit new cameras on the front bumpers of all the Teslas. That's going to be much more complicated than just like popping out the current camera, putting a new camera in right in the current spot,
So I think that very well could be, this solution that would address a lot of this. I do think, though, anytime you have a hardware change, and I'm not an expert in this space, but you're going to have kind of like a different feed of video coming in. So a lot of the kind of point estimations and how far away certain objects are, those will be different kind of pixel positions, on a hardware 3 versus a hardware 4. So I'm not sure how long it'll take, for hardware 4 kind of autonomy to catch up to hardware 3 whenever that launches, but presumably there would be some sort of kind of time lag for that to kind of pan out.
Yeah, absolutely. So let's go on to, I just started to change the format a little. I just wanted to ask you, because you just tweeted about that, a few minutes ago, and I was just reading it, and figured we'd just open source our chat a little bit about that. And anyway, we'll move on to like the macro markets like we normally do, I guess. And, it looks like there's a continuation of some kind of growth stock correction going on here today. What are your thoughts on this, Matt? What do you think? I kind of think the confirmation of Powell maybe yesterday sort of triggered this a little bit. That's my suspicion. What do you think?
Markets were up a bit up until that news came, and that seemed to be kind of like the point where the market started really turning red. So it's interesting because I think if you had said, would Powell be getting confirmed, would that be good for markets? I think most people probably would have said yes.
Yeah.
But it's like, as soon as that actually happened, people are like, well, maybe we're concerned about inflation now, or too much QE going on.
I think what it is, I mean, I've read some stuff about, Brainerd, I can't remember spelling her last name, but I've read some stuff, and it sounds like she was more dovish than even Powell has been, and that interest rates would have been, it's implied almost that if she was taking the place of Powell, that interest rates would have remained lower for longer. And if the market consensus believes that, and now she's not in the running anymore, she's taken out, maybe that's part of the reason for the run up the last couple of weeks is, creeping up to new all-time highs, is people were thinking, oh, great, we'll even have a more dovish person as the Fed chair, so rates will stay lower even longer, and so we should be discount valuing our growth stocks accordingly. And now that that's out of the equation, they have to adjust, their valuations of all the growth stocks, especially. That's sort of my suspicion. I don't know. What do you think? Do you think that's valid, or what do you think, Matt?
Yeah, I think so. I mean, the market reaction does seem to kind of support that viewpoint. But I think it's kind of like we were saying last week. I mean, something has to give eventually. I mean, you can't just kind of QE 20 billion a month or whatever it is for the next decade. So at some point, you've got to figure out what's the right off ramp here for monetary policy. And there doesn't seem like there's really a great viewpoint of how to handle that. So I think some of the jitters that we're seeing in the market are kind of folks trying to maybe take some chips off the table when we may be heading into a period of greater uncertainty, and maybe it rebounds pretty quickly, or maybe these kind of concerns linger longer. But it's an interesting time. I mean, I'm always trying to kind of reassess my own views of where do I think the market is going, and how real do I think inflation risk is, and are there better kind of asset classes that we should be considering, or just other stocks that we like that are better kind of insulations for macro uncertainty than others, and I think there probably are, but I'm not convinced necessarily that the sky is falling yet. What's your view on the next 12, 24 months? Does this all kind of pass and go away, or to what extent is it real?
I mean, I think I sort of expect occasional 3 to 5% pullbacks as we continue to creep to new all-time highs. That's sort of my expectation. So we could be just in the midst of one of these kind of mini pullbacks, which I'm not surprised. Maybe even 10% at some point. But I don't think there's any kind of event that would cause a bear market suddenly. We could all be wrong. I mean, sometimes bear markets just happen out of the blue after a long bull market, and we've certainly had a relatively long bull market minus the COVID crash. So, but the rates are so interest rates are so low. There's a lot of money out there flooding the markets. People are looking for places to put their money, whether it's cryptocurrencies, stocks, NFTs, real estate. So I don't see, I see this as a buying opportunity. Like when the markets, I wish we had more capital available in our fund to dry powder to start deploying today, because this, especially if the stock, market continues to get crash tomorrow or the next day, another few percent, it seems like a good time to get back in or get in if you've been on the sidelines. We'll see. We've talked about selling puts and stuff, and maybe we'll sell some puts if it goes down further or something on certain things. So yeah, it's I just think the next 12 or 24 months, I have a hard time seeing like a major market crash. I don't know what would cause that. Well, people have so much money out on the side. There's nothing to, unless there's some unexpected black swan event that occurs. I don't see it, but who knows? Yeah. So, I mean, the macro economy is so difficult, to explain or predict. It's very hard. We'll see. So I guess with the next things we're going to talk about is Roblox Investor Day a little bit. And then we're going to talk about Tesla, like the split rumors. And then we're going to go over the probability lab and do like a screen share. So if anyone's, listening on Twitter Spaces, when we get to the interactive brokers probability lab part, we'll be talking about options that we're showing on the screen of the YouTube live chat. And this is recorded on our YouTube channel, so you can watch it later too. But first, like Roblox, that stock has been on a tear. We've talked about it for a long time. We love it. We feel a little vindicated that we finally broke out. And, it was up to like the 130s. I mean, it's come back down in this correction to now 117 as we're talking, down 2.5% today, along with all the growth stocks. I mean, that investor day really just pumped me up. I listened to it. It was like 4 hours long, but I listened to it over a few days and at like 1.5 speed, but it was really, really pumped me up. What do you think, Matt? Did you listen to it?
Yeah, I did the same thing. I mean, it was long, like you said, so I had to kind of break it out into chunks, like you said. But yeah, it was. First of all, just the Q3 report, like we talked about, was just like phenomenal. So that kind of started this run. I think it actually touched 140 yesterday or a couple days ago. So more than doubled since the IPO price. But yeah, so listening to the investor day, I mean, it was pretty amazing that they kind of went methodically through like all different aspects of kind of their strategy. But it was, the thing I really liked about it, it wasn't like an MBA pulled together, like what should we tell the investors sort of presentation. It was really heavily focused on the experience for the users, but also I would say equally focused on the experience for the developers. So they're really trying to make sure that it's a like sustainable in the long term platform, and they mentioned kind of what we talk about a lot, which is that it's like this flywheel where you've got developers attracted to all of the users that are on the platform, and they're when they're trying to kind of optimize the things that they're doing for user engagement. They're not optimizing for revenue generation the way Facebook is, and a lot of others are. They're optimizing for like user engagement on the platform. So they want to make sure that users are coming back time and again to have a good experience. And they think if they do that successfully, the monetization options will come. But they said something, I'm paraphrasing a little bit, but they said something like, we're not going to try to like squeeze all the blood out of like a 10 or squeeze all the cash out of a 10-year-old. Like that's not like the corporate goal. So I mean, there were a couple other things I want to kind of dive into later on, but like the broad brushstrokes of the way they went about the presentation, I thought were pretty attractive and made me more bullish. But what stuck out for you?
Yeah, what stuck out for me is what I think they call it the Roblox operating system. They kind of call that internally, like for their company culture. And that's something I wasn't fully aware of, or I kind of had inklings of from listening to all kinds of interviews. Dave Baszucki does this weekly podcast or bi-weekly podcast, which is really interesting, called Tech Talks. So if you Google or look in your Apple podcast, Tech Talks, you can see the Roblox, he interviews someone from like chief developer or chief engineering officer or chief software person once every week or every couple of weeks, and just talks about what they're doing at Roblox and what the future is going to hold and such. So I've listened to a lot of those, and I've got just inklings of that kind of culture from listening to that and how he talks to the people. And this Roblox operating system kind of company culture really stuck out to me as like, that's a key ingredient right there. Like everyone in that company is working towards the same, forward-looking future. They're not sort of like a Tesla. Everyone's looking towards, like they're very aggressive about making sure that people are aligned with sustainable, advancing electric vehicle transport, not trying to like just advance their personal careers or whatever. And so I think at Roblox, similarly, the company culture, everyone's very aligned with their goal of, kind of creating the metaverse. I mean,
Yeah.
they've been talking about the metaverse long before,
And now all of a sudden
it's
that's
been a hot
popular and like
buzzword.
all metaverse stocks are like taking off.
Yeah.
But
Yeah.
yeah, you're right. Roblox has been doing this forever.
Yeah. Yeah. And so I think the way they did some, I've listened to a lot of interviews, and one of the chief officers was on we had Matthew Cantabaum on our podcast interview recently, and he has this open the metaverse podcast he does, that he just interviewed like the chief some officer at Roblox, and it came out like yesterday, and I was listening to that too. But the way that Roblox company culture sort of define, like at Roblox, the way they define what the metaverse sort of is that it's just like a immersive social experience, like where you can get on with your friends in kind of some immersion, and in technology, and enjoy it, and have a good experience. And they're really building that future for a long time now, and everyone at that company is not focused on maximizing the profit per kid that they're, subscriber per user, like you said. Like they're really just trying to increase engagement. Like they changed their whole incentive model for developers to focus around engagement versus just buying in-app things. And that's been it's turned out to be one of the best decisions they ever made, I think. It seems like in retrospect. So another example of that, they mentioned on the Investor Day, education, some of these education things they're doing, initiatives. They have like this new foundation to kind of help spur innovation in education systems or education organizations with things. But they're also trying to get, they think that their programming language, LUA or whatever, they think that's going to be like a cornerstone programming language. And I believe it's very likely to be so in a few years if they really get into a lot of, public school or private school organizations, not just part of like an after school. They don't want to be part of like an after school club. They want to be like ingrained in the education systems. And so I think their coding technology could become like a mainstream coding technology. Every kid's learning how to use, and becomes like a big thing. So they're really just trying to play the long game of staying, more than relevant, but becoming like a huge part of the metaverse that, is coming, or Web 3.0, whatever you want to call it. And then the brand building, I was really impressed, the branding, they have lots of companies that are coming to them trying to get involved on the Roblox platform now. Like Nike just launched something. They had Vans World recently. They had Chipotle recently come up with something, right? I mean, I know you're excited about
Gucci
the
and In
brands
the
too.
Heights and
Yeah.
yeah. So like this is one of the things where like financial analysis doesn't really do justice to a potential opportunity. So, I mean, I don't think we've talked about this publicly in the past, but we were trying to do like a valuation of Roblox recently, and I was just kind of having a hard time making the financial model kind of make sense with kind of where we thought this was going. And that's because you've got this kind of core business that they have right now that you can make certain assumptions on, like how fast it grows and how monetization happens and all that sort of stuff. And it's just hard to kind of see significant upside on the stock if you're just kind of extrapolating that existing business forward. But the thing that was really clicking with me when I listened to Investor Day is when they talked about kind of, we talk about optionality within businesses, not only just kind of buying options on the market, but when a business itself has optionality, like Tesla has with autonomy. I think Roblox really has that with three opportunities they're pursuing. One was that brands thing that they're talking about, where brands are actually developing on the platform right now, and that's going to be a way to drive engagement. Another you mentioned was education, and then the other one was music, and they've already had I think, really impressive statistics when they've just started dipping their toe into all three of those buckets recently. And so thinking about like extrapolating forward, they were talking about every brand like having an in-house kind of Roblox development team. I like that might sound crazy to people right now, but to me, I think that's going to be the way that it develops. I mean, just like you've got social media for like every Fortune 500 company now has social media teams, and it's just I think it's going to be just a continuation.
Everyone has a Twitter handle they have to add,
Yeah.
and Twitter and Instagram, they don't have to support Nike to get Nike on Instagram. Same thing. Roblox is building their platform in a way where they won't have to necessarily like support Nike to create their own platform within the Roblox. They're building out the platform so that it's self-service, self-sustaining, self-supporting, like so that, whether it's Reebok or Under Armour coming on the Roblox platform, they build their own ecosystem using the Roblox tools. Roblox doesn't have to really even formally engage with them in any way. They're just like another developer. And so I think we're going to see, job postings, not just for, social media managers, but you'll have like, who's going to be the Roblox manager for, McDonald's here, who we need people out of college to be Roblox, development managers, so you'll have like a whole new kind of ecosystem of brands, development going on into Roblox, and it'll just help fulfill the self-fulfilling prophecy of Roblox becoming the metaverse, like faster than anyone else, like you have all these other things, whether it's like decentralized versions of a sandbox or whatever, they're all like startups, it's so chaotic, Roblox is like the clear first mover advantage. And to me, it just seems highly likely that that's just going to continue to accelerate that clear first mover advantage for Roblox. It's just going to become a bigger first mover advantage, and maybe it evolves into like $1 trillion company down the road. It's not unreasonable in my mind to think about it that way.
Yeah, there were so many things that kind of came up during that 4-hour presentation that I'm like, oh, I hadn't thought about this as an opportunity. I hadn't thought about that. I mean, one off the cuff, somebody just asked, like, how do you think about like NFTs in the Roblox metaverse? That was just like an analyst question. And they were talking, one of the big focuses they had is it's kind of some improvements to the avatars that they're really working on, and how those are going to become a lot more customizable over time. And how they really haven't done very much to kind of optimize how they're monetizing those. And so, I found it really interesting because if you think about how successful NFTs have been, and people are, using those as kind of like a way to express themselves digitally already, but it's kind of is very limited if you think about it. And so I think it was Dave who had this response. He said, we're going to have a lot of things that are, I would say comparable to NFTs, whether like you can buy art, you can buy furniture, you can buy like, clothing, obviously, you can buy a pet for your avatar. And not only will you be able to like just have it in a wallet, but you'll actually be able to interact with these digital objects in a way that's not true of NFTs. And so there will be, they mentioned a lot kind of like Roblox as an economy, not as like monetization, channels or anything like that. So, they were saying there's going to be people who are, developing and selling these. There's going to be people who are collecting them and selling them. There's going to be people who just, buy them to use them, but it's all going to be part of that like digital expression. So that was another, just like one example of a way that I think they're going to be able to take advantage of this huge trend that I think we're just at the beginning of, and probably provide a better use case than NFTs, which is already like, we're seeing how big that market is already. So it makes me more and more bullish.
Yeah. And I'm very, we're drinking a lot of the Roblox Kool-Aid lately, but it feels good. And it feels right in a lot of ways. So, we're excited for, it seems like metaverse is a big topic. It's very hyped right now, and there's a hype cycle. It goes up and down, but as more companies are asked about the metaverse or want to talk about the metaverse or want to get involved in the metaverse, I mean, Roblox is a clear pure play in that respect. You can't invest directly in Minecraft, for example. You have to invest in all of Microsoft, like you can't invest directly in Epic Games. It's privately traded, so
Oculus,
as a public Oculus,
yeah.
Same thing. And Oculus is more of a device company in my mind. They have cool software. It's not really, Facebook's going to put like 10 billion a year towards, developing what they call the metaverse. But I think Dave Baszucki was even asked about that on the Q&A portion of Investor Day. And I liked his answer. Like, he didn't down, he was being set up for like a softball to like crush Facebook, but he didn't downplay
Yeah.
them. Instead, he just talked about like what they're doing and what they've developed and how they value their ecosystem. And it's very hard to recreate, like sort of like you can't throw money at building a whole new EV that's going to beat Tesla, like you can't just throw a whole bunch of money and do it, like I feel like
Well, that's
Facebook's like the old legacy automaker trying to build, beat Tesla at its own game, but
yeah.
Tesla's got inherent advantages in its
That's
foundation.
exactly what the parallel I thought of, because like you see, like GM and Ford and all these companies are saying we're investing $25 billion a year, or
Yeah.
like all these
Yeah.
things, and I'm like, it's not the money, like
Yeah.
it's like the money, of course, like it takes some amount, but like the
Yeah.
like the physics should be driving. Like you should, as an investor, you should want them to spend as little money as possible in order to
Yeah.
achieve like a competitive EV. And
Yeah.
did you listen to that Alex Potter interview with Rob Maurer recently?
I did listen to it. That was good. Yeah.
He had a comment in there that really, kind of stuck with me. He was like talking about, oh gosh, I lost my train of thought a little bit. He was talking something to the effect of like you've got all these companies out there that are like throwing cash at these problems, but like they've got like different programs. They're trying to launch like 20 different electric vehicles, and they've got like different teams dedicated to each one of them. And Tesla just has like 4 SKUs, and they're going to sell more cars than these like 20 programs combined, which are going to have much higher O&M, probably lower gross margins too. And so like, how are they going to compete when they're spread so thin? So like, I think framing anything at like Facebook kind of did as like a money problem is just the wrong approach.
Yeah. I lost you for a quick second there, but anyway, I had a phone call. Sorry, but
Sorry.
I had to delete it. Sorry. So yeah, framing anything. I mean, I think what you're saying is that you can't just throw a bunch of cash, at something to outcompete Tesla or Roblox. Like cash is not the answer. Like you can have $1 trillion. Like the U.S. government throws hundreds of billions of dollars trying to build rockets, and SpaceX or Rocket Lab or now Astra, they're doing it for like a fraction of the cost. So
Yeah.
it's crazy. But yeah, let's move on to Tesla. I mean, we got to talk about the split rumors. What are your thoughts on the split room? I mean, there's lots of rumors about this split 12/9. And I mean, maybe it's just a date where they're launching like the Cybertruck deliveries or something. I saw someone post something about Cybertruck deliveries coming soon on Twitter. Someone got like a message from their sales rep, but who knows if that's, that could just be a mistake or whatever. But do you think this December 9th is any date to be like, you think there's some kind of communication from Elon about December 9th and if there is it split related or something, or just in general, like some announcement or some surprise? What do you think?
I think it could be. I mean, I might be getting a bit of a reputation as like a negative Nancy or a Debbie Downer, because I had another tweet, I think over the weekend, saying like, that picture Elon's tweeted of like, it was a simpler time of like that Viking raid on Iona in like 1209. Like I just did some research, because like, well, let's just like make sure that like that's actually relating to 1209. And some pretty basic research kind of led me to believe that was actually like almost certainly a Viking raid in like 806 or 802. And I won't go into all the details why there, but the point is like it's very easy to kind of come up with if you're looking for a link to something in your mind, like you can come up with a variety of ways to kind of get there. So like, I think it's possible, like Elon's tweet about 12 million pounds of thrust at liftoff, and I forget who it was that posted a really detailed thread on some of the other kind of connections there. That I found reasonably compelling. So I think I don't know if putting a probability on it, but it seems like maybe a 50-50 chance that something happens. But I don't know where the split came. Like I was trying to make sense of that. And to me, like Elon has no problem throwing cold water on Tesla stock and is not super interested in it. And on the flip side, he seems like way more interested in like developments at gigafactories and like some cool new engineering thing that it'll take Wall Street 2 years to really like figure out and like work into their valuations. So I don't know. It wouldn't surprise me if something happens, but I'm also not, dead set that for sure it's going to happen. And now I'm convinced. What's your thought?
Yeah, I'm uncertain. The probability, I'm very uncertain about the probability, and we'll go over the probability lab in a minute here, Interactive Brokers, and we can look at some examples, I guess. But yeah, I'm very uncertain about whether there's a split going on or not. I mean, I could see it both ways. I could see him doing some secret communication that there is a split. I mean, I think there will be a split sooner or later. It's just a matter of when, right? It's gonna be, is it gonna be December 9th, or is it going to be in 3 months or 6 months or a year? There will be another split. Probably be multiple splits over the next decade. I don't know, but it seems like we're ripe soon for one. Whether Tesla's at $1,000 or $2,000 a share, it seems like a good time to do a split, considering he did it last time when it was close approaching $1,000 a share. So
yeah, I definitely agree with that. And one of the things that Gary Black mentioned, which kind of makes sense to me, is he noted how Elon has stopped selling shares. At least there hasn't been a Form 4 filed in a while, so we know he didn't sell toward the end of last week.
Yes.
So the like reasoning, one potential reasoning would be that he's in possession of material non-public information.
Yeah. Yes.
So that could
that increases the probability from
I agree.
10% to 25% maybe or something. If you had it, it just seems like it's a signal there. Yeah,
I agree, because the way that Elon has handled anything with a stock in the past, it's sort of been make the decision, go, it's done. The capital raises and stock splits, that sort of thing. In the past, they've been very quick, and so to me, it seems unlikely that he'd want to drag out selling these shares for months at a time. So I do think that did kind of sway my opinion a little bit, that maybe something could be coming up here pretty soon. Yeah,
I agree. And I don't know if it's connected at all, hopefully not in a bad way, but they just hired some SEC lawyer. So I didn't read the analysis, but it's probably just standard hiring a new lawyer, and the media is making a big thing about its LinkedIn that he used to work at the SEC or something. But there was some new hire to their law team, to their legal team for general counsel or something like that. So hopefully it's not connected in a bad way to Elon being afraid of selling stock with material information in hand at the wrong time and such.
Yeah, well, he did have that share plan in place, so I think that, there's some leeway there that he could have. Because that selling plan was in place before, he would have been potentially in possession of MNPI. That might be a way that he could sell. So I don't know. I mean, I think I'm curious to see, honestly. I think it's just gonna be fun to come to December 9th and see was this actually something, or was it just Tesla Twitter going nuts again? Either way, I'll be happy, honestly.
I know, and I wouldn't be surprised if there is a split announced and the stock drops $100, or if there is no split announced and the stock goes up $100. I wouldn't be surprised either way. I mean, there's going to be some volatility around that date. I think that's almost certain. I just don't know what direction, and can't say for sure. There's just a lot of speculation. The options in Tesla is incredible. There's so much options activity in Tesla. It just makes the stock very volatile now these days, and the market makers probably just they either make a ton of money or they're freaking stressed out like crazy about trying to hedge their positions constantly. I can't tell. Some weeks they probably we're making a lot of money, selling, implied vol. And then other weeks they're probably oh crap, gamma squeeze, cover. So
yeah, 90% of the time they're probably making bank, but then every once in a while they're 5-10x losses on some of these positions that they sell. So it's but that's the way options work. I mean, whether if you're selling, you're going to make a little bit of money most of the time, and if you're buying, you're going to lose a little bit most of the time. But every once in a while you'll have these kind of amplified returns. So it'll be interesting.
Yeah. So let's go into the options probably, but maybe we can look at December, the first expiry or so after. I think December 17th we're going to look at expiry on Probability Lab. If you're able to share your screen, it's kind of a test.
Yes.
And I'm going to maximize my screen so I can see it too.
So is that coming up? Can you see my screen now?
Yeah, I can see it.
Okay.
I can.
Yeah, and anyone listening on Twitter Spaces, Emmet said this earlier, but for anyone who joined later, if you want to follow along, seeing what we're showing on this Probability Lab through Interactive Brokers, hop over to the YouTube stream because you'll be able to see it there.
Yeah, and it'll be recorded as well, so people can watch it after the fact. The thing about the probability lab, most of interactive brokers is the user experience is not ideal a lot of times, and so the probability lab is an incredible tool in information wise, but like the fonts are tiny. I mean, there's no way for me to maximize the font to see the key thing we look at,
Yeah, let me
which
get my
most people
glasses
can't
on
see
actually,
here.
because those are.
Yeah. The key thing we look at here that most people can't see is the numbers in red at the bottom, which shows the probability percentages at different strike prices for December 17th, because you pulled up December 17th as a calendar date. You can see the big curve there. And so December 17th is like the first, I guess you go to December 10th, like the day after. But we like to just, if we're going to do something in options, we'll go to like December, there's December 10th there. But maybe let's go to December 17th, because if we were going to do something with options related, we'd like to do it December 17th, just because it gives an extra few days for the stock to kind of play out whatever news may or may not happen on December 9th. And so,
yeah, because I think the split last time around, it popped right away, but it continued to rally thereafter. So a lot of times, it's better to play a longer duration option. But
yeah.
So if you look at like, where's the 50% mark in the red font at the bottom?
It's
what
like
strike price?
somewhere around 1,085. It looks like.
Okay.
Maybe it's like 1,090 somewhere in there. It's hard to tell exactly, but it looks like it's kind of right around here.
So it's about where the stock is trading right now. The stock is at 1,094. So the market's saying like 50-50, whether it's going to be above 1,085 or below 1,085 come December 17th. And so like the way Matt and I use the probability lab for informing what options bets we may or may not take is we might say, okay, before we even look at this, sort of like what we talked about with Chris Liss on betting odds, on our interview that was released over the weekend, like before we look at the NFL team matchups for the weekend and what the Vegas odd makers, this is like the Vegas odd makers version of sports betting. So this is, this is what the options market prices currently are pricing as probabilities mathematically. And so we might look at it and be like, okay, we think there's 25% chance that Tesla is going to hit $1,500 on a split, news within a few days of the split announcement. So if we think there's a 25% chance, we go to here and say, okay, what's $1,500 saying as a percentage chance there? What does it say, Matt? Can you read it out loud? It's hard to see.
It's about 97%.
Wow. So Tesla.
So there's like a 3% chance, roughly, according to the market, that Tesla will be at 1,500 or higher on December 17th.
Yeah. And the option pricing at that option is priced at 685 by 710. That's the bid offer. So $7 per contract is what it costs for a $1,500 call strike for December 17th. So if we thought legitimately there's a 25% chance that there was going to be a split and there was going to be a split and the Tesla was going to rally, that's the thing that I'm not sure about. Like, I think maybe let's say there is a 25% chance of a split in our minds. I'm not sure that automatically coincides with Tesla rallying 25% right in the days following like it did last time. History doesn't repeat itself always. It rhymes sometimes, but it doesn't repeat itself always. So I'm not, I would say, maybe it's like somewhere between a 3 and 10% chance or something like that. I don't know. So it's sort of in our mind's eye, like, hey, it seems to be, priced decently, or not priced well. And if you want to try to take advantage of it in our mind, but we're already so heavily invested in Tesla and we're biased towards Tesla. Always, we know we are, but it seems like, the interesting analysis to do December 17th, according to this probability options, probably. What about like the 1,250 strike? What does that show about for probability wise here? Let's see.
So it's like around 80%, probably 79% or something like that.
Okay. So the options are pricing in about an 80% chance that Tesla is going to be below 1,250, or only 20% chance that Tesla will go above 1,250 come December 17th. That's another thing to look at potentially. So you can look at this in various ways, but 3% chance of it being above $1,500 in like 2 or 3 weeks. If there's a major news announcement December 9th, you can kind of figure out, do you think that's right or not? So is the options market pricing in a major news announcement December 9th or not? It doesn't seem like it quite is to me. I don't know. What do you think, Matt?
Yeah, I don't think so either, but you got to kind of, look at the payout. So like the 1,500, for example, what did you say that was priced
$7.
$7. So like you have to get, obviously, like at expiration, you have to be at 1,507 or better. But
Well, look
in
at the
my mind,
1400.
it's like
So 1500. If you buy the 1400, that costs like $12. So you buy the
$12.
1400 strike, $14. If it gets up to $1500, that means you made like an 8x return on that.
Yeah. So that one to me seems a little bit more reasonable, because to make any money on the 1500, strike, you basically have to get to like 1600 in my mind to make up for the amount of risk that you've taken. Because I think there's probably a 90% plus probability that option, if you bought the 1500, is going to end up worthless.
Yeah.
Because even
And
if
these
the split
percentages
happens,
we're throwing out, this is just our own like gut feelings. Yeah. We don't have any like
non-investment
spreadsheet.
advice. Yeah.
This is our gut feelings of watching the stock for so many years closely.
Yeah. So like, to me, that that risk reward is not super apparent. But on the 1400 strike, then yeah, it seems like there's at least more of a there's certainly a higher probability that you could have like a bagger kind of return. Because if it does get to 1500, like again, maybe it's only a 5% chance. So then you've got a 5% chance that those options that you bought are worth $100 per contract, essentially. So I guess that's only a $5. In that case, that's an expected value of 5, which is slightly lower than the value there. But could also rally to 1600. So you'd have to do like what's your percentage probability that it gets to each of the potential kind of like above the strike strike prices.
And these are weird trades because that most likely they're going to expire worthless and be losing trades. Like, 5 out of 6 times or higher, you're probably going to lose all your money on this type of trade. And we realize that when we do them. But, the 1 out of 5 or 1 out of 10 times it hits, you make a big return potentially. So, yeah, it's a weird type of mindset to have on these types of trades. It's different. Yeah.
Yep.
But let's go into the February. Let's look at the February 2022 timeline here. So we're going to look at the February 22 and the January 2023. So a year out. So February 22 timeline. If we look at the same, look at the 1500 strike for February 22. So this is after Q4's monster, we think it'll be a monster delivery number. Maybe it's incredible gross margins again, surprise. What is it saying for the percentage for a 1500 strike?
It's around 88% or so.
So the options market is pricing only a 12% chance instead of like a 3% chance, like on the December 17th. Yeah. It's pricing a 12% chance that Tesla will be above $1,500 come February 18th. And so that options right now, I'm looking at my option chains, is $40. So you can buy that option for about $40, $41 you could buy it for. That sounds expensive, right? But you have to think about the percentages here. I think it's a different way to look at it versus trying to price in your head. $41, that's expensive. But 12% chance is a much higher percentage than 3%, obviously. But $41, the stock would have to get to, for that to be a 10x return, 12%, goes into 108 times. So that'd be like an 8x return. Let's say it would have to be, you'd think the stock needs to get, 8 times $41, 8 times $40, 320. So you need the stock to get to like 1820, as your kind of median expectation with a 12% chance almost, for that to be worth it. And to me, that seems reasonable. It's not as, it's just one way to think about it. You got to put these numbers together and think about it. Okay, is it do I think the stock's gonna get to $2,000 like unequivocally? Like, is that probable in my mind? Maybe some people are super bullish and think, oh, Tesla, as long as the macro market cooperates, I think Tesla's getting to 2,000 no problem by February after their earnings report. And if you think that's the case, maybe it's worth it to do this type of option trade, or maybe it's not, so. There's just different ways to look at it, different probabilities. I hope this helps people. And let's go to January 2023. These are just all hypothetical scenarios. This is not stuff we're doing per se, but this is just hypothetical ways to look at using the options probability lab. So if you're looking at this January 2023 expiry, so it's like a year out options that are 1 year out. If you bought them now and you're in the US, you could sell them like before they expire for the capital gains treatment versus income treatment, that's advantageous. That's why I like looking at these options that are like just over a year out, especially because if you do really well, you can get a much better tax treatment if you're in the US and you sell them just over a year long. So what's like, I don't know, 2000. What do you see for the 2000 for that one, Matt? For
About a 92% cumulative probability, so 8% chance it's above 2000.
only 8%. Okay, so the market's pricing only an 8% chance. This option, because of the time value, is $112, I guess. Wow, $112 is the last price I'm seeing. And 8%, is that what you said, 8%?
Yep.
So that would have to go in 12. You'd have to get to, like, to make it worth it, the stock has to get to like 3,000 plus. Like if you think that 8% is accurate, if that's what you think, but if you think it's a 50% chance it's above 2,000, then you could do the calculation yourself. $112. Oh, it just needs to go up to, $2,300 to make more than my 50% expected probability, So you have to kind of do the math yourself. The best thing to do is come up with the probability in your head first. If you've been watching Tesla carefully and you think you have an idea or sense of where you think the price could get to by a certain time, and you want to employ then for call options to try to see if you can magnify your return, the way we have occasionally, then you kind of set your own probabilities in mind. And then you look at this probability lab to see where the options are pricing it. And if your own probability is much more positive, in a significant way than what the probability lab is suggesting, then it may be worth it to buy some of those options, obviously. But you could be wrong more often than you're right. But when you're right, if you're right by a substantial amount, it can offset all the wrongs. And if you just keep getting it wrong time and time again, then it's probably not the type of investing or betting you should be doing. So I'm constantly evaluating my own ability to estimate the probabilities. And, if I'm wrong a bunch of times in a row, I have to try to recalibrate my biases or expectations. And a lot of times the macro markets controlling, you have to also account into the macro markets, because Tesla, whether you like it or not, it's kind of floating in the tide of the macro markets to a large degree. So, as bullish as the market has been, if there's a bear market, all these call options are pretty much out the window. So you gotta think about okay, what are the chances of a macro market bear market in this time frame? So the longer out the options go, the higher the chance there's going to be some major crash or bear market correction going on that's going to drag everything down significantly, right? So you got to also weigh that in your mind when you're making these decisions. I don't know, Matt, you have anything else you want to add about this stuff? Or
yeah, no, I mean, it's risky to use options, and so I would never advise anybody to use them. But I think if you are inclined, just try to hold yourself accountable, like we've been talking about here. Assess your own kind of view of the probability. Kind of check your performance over time. I mean, if you're starting out, don't do it with a big percentage of your portfolio, and just kind of. When Emmet and I are using this as a tool for the portfolio that we manage, honestly, in looking through these couple examples that we looked at, nothing kind of jumps off the page of like, the market's got this way wrong. There's a huge discrepancy between what I think is going to happen and what the market is kind of pricing. So a lot of times the best thing you can do is just be patient and kind of wait for those opportunities. I mean, just for example, like if on say December 8th, if there's still kind of no movement in prices and like the options prices by that time are a fraction of what they are right now, then it may be worthwhile to kind of take a flyer on it if the market's essentially pricing in like a minuscule probability that there's like $100 move in the stock in the next day or the next week. So
when he says take a flyer, he means like put like 1% of your portfolio of your play money in it, right? Not like not even like 10% or 20%. Yeah, something tiny.
Like willing to lose everything. But really, I think whether you're looking at a short-term kind of like a flyer like that, where you're kind of playing something event-driven, or in the past where I really have seen these forward curves look like drastically mispriced in the past. I mean, this is where Emmett's put idea kind of came from, right? Was we've looked at calls, but looking at puts, you can come up with the same sort of scenario. And so I think that the right thing to do is to look at the way that the market is pricing certain scenarios and maybe try to play those. So like for example, we've talked mostly about stuff that's kind of out of the money. But on the other side of the portfolio or of the distribution here, the market's essentially saying there's a 25% chance that Tesla stock's going to be below $550 per share. by January of 2023. So maybe with a very small portion of your capital, you could say, all right, maybe I want to sell some calls on that, or you could look at puts and
You sell some
and
puts, you
sell
mean?
puts.
Sell
Well,
puts.
yes,
Or sell
sell
calls is what you're
puts, sorry.
saying? Yeah,
Well,
yeah.
you buy calls, I guess. I mean, I should have said buy calls, because you can kind of like get some leverage. But I think you probably, if you're going to use this probability lab on that, you probably want to look at the puts, not the calls.
Yeah, I mean the calls for the 550 strike January 23, they're trading at like 600 and, or no, the last trade, that's the last trade from yesterday. So right now they're like 590. So yeah, it's not, you're not getting, I mean, you're getting a little leverage. You might as well just buy the stock on margin or something. But
It's very comparable to buying stock on margin. Yeah. So I mean, that's another way you can kind of, if you don't want to go on margin, but you do want a little bit more risk, that's one way you could kind of amplify your returns.
But the puts cost $47 for the January 2023 550. I mean, to me, that's like, in our mind, we think it's like a 2% chance it gets that low. I mean, they're really maybe at 5% or 10% if there's a big bear market in the stock market, then that's the 10% chance, but even if there is a big bear market in the stock market, we think Tesla would do so well that the stock would be above 550 billion market cap or whatever. It would be crazy for it to be below that.
To actually lose, you'd have to get closer to like 500, right? Because they're priced at $40. So
yeah, they're priced at 47 was the last price,
or higher, or 503 or higher. Then
so it seems like selling those puts is a great deal. I mean, obviously, when you sell puts on something like that, then there's a certain amount of margin requirement that goes into holding those puts you're selling, and so you have to keep a certain amount of capital handy to cover that margin requirement of selling that naked put. But it seems like a great, I guess you can get a nice return if you do the math on the capital you commit to that. So that's sort of what we thought about when we sold the $1,000 puts for, in the beginning earlier in this year. Good example, Matt. So we'll just exit Matt's screen, and I guess we'll just go into some Q&A here. Maybe since we took up so much time, we'll go on an extra 15 minutes in the Q&A, if that's all right. Usually we spend a little more time on Q&A than we have allocated right now. So I guess anyone has questions, put in the Twitter thread or the YouTube live chat. I think we have a bunch of questions queued up already, and Alec will start showing them. So from Cheng Hong Lim, thank you for this amazing sharing. Just curious, will your options trading strategy be the same for index options? Are there any particular differences between trading index options versus stock options? That's a great question. And I think I used this probability lab as well before I bought the index puts for the NASDAQ ETF QQQ last year before the COVID crash, because and you can use it for index ETF, options very easily, or any other stock. It doesn't have to be just Tesla. You can do this type of probability lab analysis for any stock or index that has options on it. So it's definitely a good tool. The key is try to think of the probability in your head first. That's for me. What I'm doing is think of the probability in my head first, and then I look at it and I say, okay, is my probability in my head very off from what's shown on the probability lab? And if it is very off, who's right? Is the market right, or is my inclination, is my instinct have some kind of advantage the market's not pricing in? So that's the difference. All right, let's go to the next question. From Justin, why do you think Elon has stopped selling, and what do you think will be the Tesla price action after selling is complete? You want to take that one, Matt?
Yeah, I mean, we already touched on it a little bit in our early conversation. I as I've been thinking about it, I'm starting to weight the likelihood of Elon having material non-public information more and more. So to me, that seems like the most likely scenario. Maybe the board has agreed on a split, or he's aware of kind of start of production at Berlin or Austin or something like that. So that's my best guess of why he stopped selling. In terms of the price action after his selling is complete, it's hard to say, but I would imagine. I mean, we did kind of see the stock kind of rebound last week when it seemed like the market kind of got over these initial concerns. Seems like macro's driving it down now. So it's hard to say, to what extent the stock would recover. I don't necessarily think it's going to bounce, just on news that Elon's done selling, because I think the market's already kind of given a decent amount of credit for him being, relatively close to being done selling anyway. I don't know, what are your thoughts?
Yeah, I mean, I think I think the price action from Elon selling has already been put in place, and selling a million shares a day on certain days is not going to have a big impact going forward. I think initially it was a very psychological impact, and lots of week longs kind of scared out people trying to front run his selling. A lot of speculators, options buyers stopped coming to the marketplace, to keep the price supported, and so it's been very volatile. But I think that the price action from his selling is sort of going to be muted going forward. Unless he's purposely selling like a ton of shares in one day and driving the price down, like with market sells or something. I doubt that would happen. I mean, as we're talking, the price is down. It's $80 now. Wow, it's down to 1,066. Wow, we could be getting back down to $1,000 a share again before we know it, if this growth stock correction continues. Crazy.
So someone tweeted that my thread this morning on FSD beta drove the stock down. So. Sorry, I wish I had that kind of power, but I don't think that was it.
Yeah, no, it just seems like all the growth stocks are really in a little bit of a correction mode right now. All right, next question here. How do you feel about Zoom earnings? From Andrew Bazio. How do you feel about Zoom earnings and guidance? I'm not understanding the negativity given that they beat expectations. Maybe this could be a good time to add to a Zoom position. Yeah, I mean, I like Zoom, the company, the product I like. We use it all the time. It's just, are the bigger players, Microsoft, with Teams, is that going to eat into Zoom's future lunch? Like Zoom was kind of anointed early on as like a huge benefit of the COVID lockdowns, and it sure was, and now that the COVID lockdowns are over, is it going to continue to benefit, the way Roblox has, or is the ending of the COVID lockdowns coinciding also with the Microsoft Teams catching on, and whatever other players, are pretty much emulating exactly what Zoom's been doing? Is there some kind of strategic advantage Zoom has over the others? I don't know the stock and the place well enough to decide or judge that. I don't know. I mean, I like the founder of Zoom from what I know, and I like their business. They seem like their fundamentals are growing into the stock price now, as opposed to being a growth stock. They're almost more of a value stock coming into that territory soon. But long term, it's hard for me to project. Like, I don't know the space well enough to know if they're going to be a long term major player in this space. What do you think, Matt?
Yeah, I was on an ARK Invest call. They've got these brainstorming calls. They were kind of talking about Zoom one of these times, and they said, like, Zoom is a better product, just kind of like bar none. But they will use Teams when they're doing internal meetings, just because it's kind of like easier, just because like it's the default option when you're setting up a meeting in Outlook. Which, like clearly they're going to use Outlook and Microsoft Excel and PowerPoint, like all the things that all these corporations have. So they're saying, like, when they have external facing meetings and they need the quality to be like super high, they use Zoom, but their default option for everything else is like Teams. So I thought that was a really kind of interesting and telling, just a stance that like the best product does not always win. When you've got like the distribution and the reach that Microsoft has with the existing platform of software that they have. I mean, I do like Zoom. One of the reasons I think we kind of got out of that position earlier, though, is it was hard to see like the near term kind of huge upside, like a 5x opportunity in the next couple of years. They've talked a lot about like some of the stuff that like in the longer term, like they didn't call it a metaverse. I forget exactly what they were talking about, but like some ways in the future where it can really kind of grow. And I think the technology is going to take a little bit longer to get to that kind of vision. So it's in my mind a company worth keeping an eye on, and I do think their fundamentals have been really improving. So there may be some moment where like the combination of the fundamentals continuing to improve quarter after quarter, and some more of that kind of the tech developing to the point where there's like a 5x opportunity on the stock. That may be a good time to kind of add back in. Maybe we're just a little traumatic though, because we've been burned on Zoom a couple times.
Yeah, we have. Yeah. From Chris One, question please. What are your thoughts on Spotify and Daniel Ek? The stock has been underperforming the market greatly despite good Q3. Worm Capital is heavily into the stock. Thanks. Yeah, I know we talked to Worm Capital privately. Maybe we'll have them on our podcast soon, or our recorded interview soon to talk to them. They are very bullish on Spotify, and yeah, I mean Spotify. I've thought about it. I'm not in the weeds enough to really be a good judge on, or have a strong opinion on Spotify, the future, if it's going to like take over all of audio or not. I mean, I see some people love Spotify and they'll like put their podcast just on Spotify, or I don't even listen to Joe Rogan anymore because he's just on Spotify, for example. I don't listen to, a lot of things because they're just on Spotify. I don't use Spotify personally. I use it for music only, but trying to like navigate all the menus is too much. I'm used to just Apple Podcasts. I have my habits for like certain, I'll listen to podcasts that are on lots of different things, but not if it's exclusive to Spotify. It's not part of my, it's a lot of times not part of my universe. What do you think?
It's a better platform actually. I've started listening to more and more stuff on Spotify lately. And honestly, like the user experience is just better than Apple Podcasts. I mean, just one example. Sure I was trying to find like some random interview, and I could only remember this guy's name who was interviewed. So I like typed in his name, and there was a list of like 20 interviews that this guy had done across all number of different podcasts. And I was like, whoa, like that's such a great feature where you can have like somebody appearing on a podcast and he'll show up on anything that person has ever done. So the search function is better. I think they're really trying to build on a platform. They're very anti-censorship, which I think is going to be a strategic advantage in the long run. So I don't know. I've personally been more bullish on Spotify lately. I think they're building the company in the right way. But yeah, we've got a lot more digging, I think, to do before we can turn the corner and say, yeah, we want to invest.
I mean, they have a 45 billion market cap, total addressable market probably is pretty large. Their 52-week high is 387 stock price, which is 50 or 60% higher than where it is now at 237. So I mean, the 52-week low is 201. I don't know. I mean, it's just something to definitely keep on our radar. Are they going to be a multi-$100 billion market cap company? I don't know. I mean, that's where it seems like a good company, but are they going to be a 10x return? That's hard for me to see, in a convincing way. I have to study up on it a lot more, to really believe that. I mean, I just don't know how commoditized that space can be. I'm sure they have some great AI or algorithms and sort of like the audio version of Netflix or something. Maybe that's the bull case, it seems like. But I just don't understand the space well enough to really opine strongly one way or the other, I would say. Something I need to study. We're so bandwidth constricted right now. It's hard enough for us to be thoroughly investigating Roblox, Rocket Lab, Tesla, and Lemonade and such, so it'd be a whole nother thing to add. So let's go to the next question. From JB, do you ever create a custom probability and have IB to find the most profitable options, build the strategies for that scenario? Yeah, there's one thing on that probability. There's a few things, a lot on that probability lab we did not go over. There's a lot of functionality. And one of them is that it lets you build, you can customize the probabilities on that chart we showed on the probability lab to what you think the probability should be. And then there's a button at the right that says like build strategy, and Interactive Brokers will suggest some option spreads. And we're not fans of option spreads. We like to keep things simple, buy calls, buy puts. I'm not a fan of bull call spreads or iron condors or anything like that. Obviously the options brokers want you to do those spreads because the more contracts, the more commission they generate. It's helpful to them to get people to do crazy option stuff. And a lot of people love that, locking in, I know they talk about it on like CNBC and all, it's just not my cup of tea. I understand how that works, but that type of, investing is a little more nuanced than what I like to use options for. Yeah.
Yeah. Could you see my screen, by the way, just with some of the stuff I was showing here?
I can't see your screen at the moment. No, I just see the questions from Alec.
Okay.
Oh, you're showing something here?
A great sharing on there. I was just showing like the probabilities that you can.
That's all right. That's okay. We'll show it next time. I think the questions are pulled up. So from Alex B, question: how would you estimate the risk of a big war in Eastern Europe, Ukraine or Russia, for the U.S. stock market? I put 30 or 40% probability of war in 2 to 4 months. Wow. and I'm from Ukraine. That's interesting. That's a good piece of info. So a lot of people talk about the Taiwan conflict in China too, but it seems like this Eastern Europe, Russia troop buildup on the coast of Ukraine. I've seen headlines about. I mean, what even happened to the stock market when Russia went into Crimea and stuff? I mean, did the market really flinch a whole lot there? I don't know if it did. I mean, sure, I think it's terrible for Russia to kind of like just march in and take over these other provinces or territories and no one's stopping them. I don't think that's a good thing, but I'm not sure the market at large is going to is going to correct or really gyrate significantly in the U.S. at least from such a geopolitical event. This could be the time it does. Maybe the market's like ready to have some volatility put into it and just looking for a good excuse like this, but it's not a given. I mean, what do you think, Matt?
Yeah, I think as I never like to talk about these things that are so kind of human and tragic in terms of only the stock market. So take that with a grain of salt. Like, this is clearly more of a human issue than a stock issue. But I would say the risks for kind of broader stock market issues are, I think, going to be worse to the extent there are kind of like foreign interventions, but kind of opposing the big names like Russia or China. So like if the United States, for example, seeks to defend Taiwan or comes to the aid of Ukraine, and so then you got like a standoff between two superpowers, that's going to be a much worse situation. And I think there'd be like pretty massive skittishness in the markets if you got like actual, U.S. and Russian troops firing on each other, or U.S. and Chinese troops firing on each other. So I think to the extent larger countries are opposing each other, that's where I think the market jitters could really escalate.
Yeah. I think that's exactly right, man. I agree with that. Next question from Super. Let's just make this the last question since we're at 10:45 almost. From Super Jambon 31 on Twitter. Do you think what Peru Saxena talks about in the video with David Lee has a good chance of happening? I'm familiar with Peru. I'm not even sure I'm pronouncing his name right. And I've seen some of his stuff in the past. I didn't listen to the Dave Lee interview. I think it just came out yesterday, so I have to listen to that because he definitely has an interesting take. I know he's pretty well known and he makes a lot of kind of global macro market kind of predictions or analysis. And in the past, I feel like he's used technical analysis or, hinted at technical analysis, which I'm not a huge fan of personally for the most part. I like to look at charts just to see where the stock has been in the past. And if it's come down quite a bit, maybe then it seems like a more likely good buying opportunity if I think it's a great stock. But that's about as far as I go with technical analysis. But I don't know, Matt, did you listen to any of that interview, or what are your thoughts on Peru and his view?
Yeah, so I got only half an hour or so into it. Okay. Take anything I say with a grain of salt, because I may be not representing his views in their totality just based on what I saw. But yeah, it's similar to you. Like I think his concerns are legitimate. I mean, it's a lot of the same questions I'm asking myself. I think a lot of investors are thinking about right now. Is how significantly should we be thinking about inflation, and is there like a likelihood of a broader kind of market crash? The stuff that he was talking about as kind of the rationale for why he thinks a crash is coming is largely kind of historical comparisons. So like a version of technical analysis, kind of like you were saying, Emmet. So, he talked about like the .com buildup and like the crash in '99, and he talked about like the 2008 crash, and kind of like the relative percentage movements between like the buildup and like the peak and the collapse. So I don't put a whole lot of stock in that type of analysis, just because I think certainly it can happen, but I don't think that's kind of reason to believe that it will happen now, just because you've seen kind of like a similar technical pattern. The other thing he talked about, which I disagreed with even more strongly, was kind of the collapse of high growth names. Like he mentioned the ARK ETFs in particular, and how they were at peaks in February, and they've They're down quite a bit since then, and a lot of the growth names, like I think he mentioned Peloton, and maybe a couple others as well, which were kind of like, COVID reopening plays. And he talked about those and like their pretty significant sell-offs since those relative highs earlier this year, as kind of like proof that this collapse is already happening, and then it's going to kind of spread like contagion to the rest of the market. But now my view on that is that those high growth names or those kind of COVID reopening plays were kind of overbought probably to begin with. I mean, if you look at like the multiples of a Peloton, I really like the company, but I just couldn't get around the valuation. So they were probably overbought at the top anyways. And then I think it's kind of natural if you are concerned about inflation. We've talked about this many times. High growth names are going to suffer anytime inflation fears crop up, because investors are going to discount further away cash flows more than kind of more current period cash flows. So that I think is very clearly happening, but that doesn't mean that the overall market is going to collapse. I mean, that's more kind of asset rotation into value stocks and out of growth stocks. So I think, again, I didn't hear his whole thing, so it's possible I'm missing a couple points. But those two kind of issues that he brought up, I at least didn't really agree with.
Yeah. I'm going to listen and kind of have my. I'm curious. I want to listen to it. I know he's got a big following and he's been investing for a long time, so he certainly has a different viewpoint than we do. But it's good to look at things from different viewpoints, and I'll listen to it because I'm curious now. So yeah. All right. So yeah, with that, I guess let's just, stocks are collapsing, growth stocks are collapsing. Tesla's down 7%.
87%. That's $87.
87. I was
It's
going to
not
say
that bad.
$87. I said 7%. Yeah, it's down 7%. Yeah, I mean, man, this is people are panic selling a lot of these growth names. That's for sure. I mean, I see some green and some value stocks, like you were saying. Like, there's certainly a rotation. It seems like there's a lot of people kind of crowding out of growth stocks all at once and kind of putting money on the sidelines, or figuring out how they're going to reallocate their chips based on maybe a new long-term interest rate environment versus if Boehner was took over instead of Powell. Powell has his kind of view of when he's gonna increase rates and such, and maybe that's more likely to happen, and now the market has to adjust for that, versus before they thought there was a good chance. Maybe it seemed like Boehner was the favorite. I don't know. It seemed like rumors, the way the press and people were talking about it, is that Powell was likely out, and so maybe that turnaround has ruffled some feathers on how to value some of these growth stocks with the discount value, cost analysis or whatever. So yeah, we'll see how long this goes on for.
Hopefully not much longer. I'm ready for
not
a
much,
bit more
yeah.
green.
Yeah. So, all right, guys. Well, good chatting, and it'll be on our YouTube live channel recorded. So hopefully we'll have a better week next week when we do our next week's live stream. All right.